Okay, Assalamualaikum warahmatullahi wabarakatuh. Today I'm going to continue with another subtopic under the topic 4 decision making. Okay, this decision making problem is called make or buy. So what it essentially means is you imagine that we as the management accountants, we need to help the managers to decide whether the company is worthwhile to buy a certain component from outside, or is it better and cheaper for them to manufacture it internally. Okay, so imagine there is a company. This company is producing a product. So to produce the product, they need a certain material which is in the form of a component. So this component, they have a choice whether they want to make it internally and then assemble it into the final product, or they want to buy ready-made from outside supplier and then to assemble into the product also. Okay, so as management accountants, we are going to advise them which one is a better option. And to do that, we have a simple solution, which is to look at the cost, just to look at the cost of making, okay, and we look also at the cost of buying. So if we know the figures, how much the cost of making, how much the cost of buying, then we compare. When we look at the comparison, we will know which is the cheaper. So let's say if the cost of making is 10,000 ringgit and the cost of buying is 9,000 ringgit, so the cheaper option will be to buy. So the decision will be to buy, and vice versa. So it's very easy to decide. However, the challenge is, okay, this is just the simple rule which is consistent with what I said just now. The challenge is to calculate the cost. Okay, so we have got here the cost of making and the cost of buying. So we need to know what is included under the cost of making and what is included under the cost of buying. Once we get the figure, we can easily make the decision using the rule that I gave just now. Okay, as a guide, okay, to calculate the cost of making, first you need to look at any variable cost. So the variable cost here consists of the usual variable cost. Okay, what are the usual variable costs? We know that we have direct material. We know also that normally direct labor is a variable cost, and we have the variable production overheads. So these three things are the normally found under the variable cost. Okay, so add them together. However, that is not the only cost of making, because if let's say to make the component, the company needs to incur additional fixed costs, then this additional fixed cost must also be included in the cost of making. Plus, there is another thing called the opportunity cost here. So if opportunity cost arise also, it must be taken into account. Therefore, cost of making can have three separate components. So you need to add them up and get the figure. Okay, for the cost of buying, if let's say you buy from outside, that means you don't have to be worried about how much material is going to cost, how much labor and so on. You just buy ready-made. So when you buy ready-made, the seller will quote you the purchase price. Okay, so this purchase price is not the only cost of buying, because sometimes when the company buys a component from outside, they have to pay for things like transport charges. They might have to pay for some kind of taxes. So these are all the necessary purchasing costs that accompany the purchase. So therefore, you need to take into account all these things to be considered as the cost of buying. Okay, now let's look deeper into this opportunity cost. Opportunity cost is when, let's say, okay, you have a company, okay, the company is now producing another component. Okay, this is another component, not the component we are talking about make or buy. Let's say this component is XYZ, and now they want to decide whether they want to make or buy another component. Let us call this component ABC. Alright, so this is actually their existing production. Now, if let's say, when they want to decide about component ABC, whether to make or buy, and the making of the component ABC internally may jeopardize the production of component XYZ because of the situation of full capacity. So opportunity cost happens only when there is full capacity problem. That means they don't have enough space and yet they still want to manufacture, which means that it will lead to them having to sacrifice their existing production. So if that happens, there will be some other production that will be reduced. This one, if in my example just now, production of XYZ will be reduced. If that is the case, opportunity cost will occur. And if opportunity cost occur, you have to take it into account here in the cost of making. So in the cost of making, you need to have some kind of quantified amount in ringgit and sen. So how do we calculate? Okay, we calculate based on contribution loss from XYZ just now. Okay, so this will be the selling price of XYZ minus UVC of XYZ and times by the units of XYZ lost. That will be an estimation of the opportunity cost involved. So once you get the ringgit and sen, you add it into the cost of making, then you will have a complete cost of making figure. Alright? Okay, let's look at a simple illustration one, make or buy. Now, assuming that this company, okay, don't confuse this with my just now component ABC. Let's say the estimated cost of producing a unit of component ABC is as follows. Okay, direct material 5, direct labor 4 ringgit 30, variable overhead. This one is variable, okay, 250, and then fixed overhead 180. This one, fixed overhead, is an absorbed fixed cost. So therefore, this is not additional fixed cost, okay? This is absorbed fixed cost. Absorbed fixed cost is an irrelevant cost. So therefore, you need to ignore it in your cost of making. Okay. Consider the required volume is 1,000 units. If they buy from outside, the outside supplier says pay them 12,000 to supply all the components. All the 1,000 units will be charged 12,000 ringgit. However, there is a delivery cost from the supplier will be 500, and this will be borne by the company, which is by us. Okay, so there is an additional purchasing cost of 500. The question is, should the company make or buy the components? Okay, so the solution is, number 1, calculate cost of making. Number 2, calculate cost of buying. Okay, so in calculating the cost of making, alright, if you look at this, we have got direct material 5,000. Okay, how do we get 5,000? Because per unit is 5 ringgit. So 5 times 1,000 units will be 5,000 ringgit. Another variable cost is direct labor, which is 4 ringgit 30. So 4 ringgit 30 times 1,000 gives us 4,300. Similarly, for variable overheads, we get here 2 ringgit 50. So 2.5 times 1,000 will be 2,005. Now, is there any additional fixed cost? Not mentioned here at all. Is there any opportunity cost? Not mentioned. So therefore, we only have to consider the variable cost of making. All these three are variable costs. So the variable cost comes up to 11,800. And then we calculate the cost of purchase. Okay, the supplier quoted us 12,000, and then we have to calculate, we have to add in additional 500 delivery cost. So in total is 12,500. It is clear from this calculation that the company should make the component because this will save the company by 700. Okay, so it's very simple like that. Okay, that is the illustration without opportunity cost. Now let's look at with opportunity cost. Okay, let's say the estimated cost of producing the component is as before, required volume is as before. However, okay, the manufacture will lead to a reduction of 250 units of existing product. We don't know lah what is the name of the product, but there is an existing product which is going to be reduced. When reduced, that means we are going to sacrifice this production. If we sacrifice this production, there will be loss contribution. And if it is loss contribution, it is an opportunity cost. Okay. However, we know already how much is going to be lost. What is the selling price of the product to be lost? What is the UVC of product to be lost? So we can easily calculate the opportunity cost. And the outside supplier, if you buy from them, they are going to charge us 12,000 also. Delivery cost will also be 500 borne by our company. So, should the company make or buy the components? Okay, so we make the solution. Same thing. First, we calculate cost of making. Second, we calculate cost of buying. So, the cost of making as before, 5,000, 4,003, 2,005. But we have to add opportunity cost coming from 250 unit loss. The selling price of the unit loss is 12. The variable cost per unit for the unit loss is 480. So total opportunity cost is 1,008, making the total cost of making to be 13,600. Compared with the cost of buying, it looks like buying is cheaper. Therefore, the company should buy the component because it will save the company 1,100. Okay, so that is another example where there is an opportunity cost existing. So before I end the make or buy subtopic, I would just like to draw your attention to the qualitative factors that needs to be considered in this kind of situation. Okay, so if let's say, for example, this is your final answer. The company should buy the component. Okay, then as a management accountant, when you want to advise the company to buy, you must also consider this type of qualitative factors before the company finally decides it's good or not. Decision is good or not to buy the component from outside. For example, you can question the quality of the external component, whether it's acceptable or not. Okay, the reason is because of this. If you make it yourself, you can control the quality. But if you buy it from outside, the quality is not under your control anymore. So is it a good thing? Is it something that you should be worried about? So this is a kind of qualitative factors companies should consider. Another thing is, if let's say you buy from outside, what about the delivery time? Are they going to be able to deliver on time or not? Okay. So there are many more of factors that relates to decision to buy. Please look in any textbook or on the internet and put in under your own notes. Okay. Alright. Now, if let's say, for example, the first example just now, we say the company should make. Okay. So what are the qualitative factors to consider before the company finally decides to make? Okay, among the example of qualitative factors to consider is, if let's say they decide to make and there will be some opportunity cost arising. Okay, this is when there is a case of opportunity cost. Then the company might face customer loyalty being affected because of the regular sales being foregone. So this might jeopardize the image of the company. That is number one. And then number two, if they decide to make, whether they have the internal expertise to make or not. Okay, so sometimes it's better if they leave it to the external expertise to make the component rather than them having to train people from scratch and then proceed with the production. So these are the issues that needs to be taken care of before the company finally decides to make or buy. Okay, so I end my lecture now. Later I will give an illustration of how some other past semesters question on make or buy is solved. Okay, thank you for your attention.